Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure recognize two official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Hello everyone, I'm Dong Jiaqing, Tony. Now let's start today's group discussion. Good evening. First, I want to let everyone know that this week is going to be extremely busy. First of all, this week we have the FMS OFOMC. Second, we have the start of earnings season for the Magnificent Seven, the heavyweight tech stocks. We see that on Wednesday after the market closes, there will be important reports. There will be a dense release of earnings reports, and everyone knows that Thursday and this week in general will see a lot of earnings announcements. On top of that, some issues left over from last week are still unresolved. So we need to take a look. There are a lot of topics to cover today, so let's get to it quickly. First, let's take a look. Actually, starting from the Saturday before last, Trump began making statements about the border wall issue, which really started to ramp up the tension. The situation escalated very quickly. So what about Monday? Even though last Monday was a holiday here in the US, the situation was deteriorating so rapidly that by Tuesday, adjustments had already started. Of course, we won't go over everything that happened from last Tuesday to Thursday again. We won't revisit those details. Instead, let's focus on the developments that happened on Friday, especially the latest ones. The main thing is that Trump and Greenland are currently working on the framework of an agreement. First, he said that the part of the 1951 agreement that guarantees the United States military needs to be revised. Second, he wants to NATO wants to set up a multinational NATO command center in Greenland under U.S. command. Then there will be an economic clause, which includes mining rights. Also, they want to prevent Russia and China from establishing an economic or military presence in Greenland. The U.S. will also stop threatening Europe with tariffs. This is the so-called framework agreement. But first, let's take a look at the first point. Here, we need to notice the so-called military requirements mentioned, and again, it's a multinational NATO command center under U.S. command. So you can see that basically what they're aiming for here is... Next, the parties that will be discussed are, first, the United States, second, NATO, third, Denmark, and fourth, Greenland. As for some of the more vocal European countries, like France, Germany, the UK, although they have spoken up and made statements at the Davos Forum, honestly, what comes next really doesn't concern them, because their voices don't really matter because they're not directly involved. If they want to speak up, they should do so within NATO. But as for NATO's Secretary General, Rutte, well, he basically listens to Daddy Trump. So you can see, you get the idea. So at this point, it's really just down to the main parties. Next, it's up to the US and NATO to act as mediators. And then the US, Denmark, and Greenland will be the ones actually negotiating. But, you know, the power dynamics here are really uneven, so just wait and see what happens. So Denmark has been sidelined. How exactly and to what extent? We'll have to keep watching to see. Of course, Denmark has drawn some red lines here. First of all, they've emphasized that, look, Rutte does not have the authority to represent Denmark in negotiations. Also, ceding territory is off the table for negotiations. So basically, NATO has adopted this red line. Now, we'll have to see whether Trump will end up crossing that line. In my opinion, it's quite possible that he will. It's getting very close to the red line, but it might not actually cross it, because once you cross the line of sovereignty, if you cede territory, that would be a much bigger problem. Denmark might have a strong backlash in the end, so that's not ideal. Also, as we just mentioned, any restrictions on military presence, let me add a bit more on that point. Just now, we mentioned something about Russian and Chinese activities in Greenland. First of all, Russia's own territory is already within the Arctic Circle, and the land on Russia's side, its coastline is actually better than the American side, so it really doesn't need to go to Greenland. Second, as for Greenland, From what I know, China hasn't sent any ships to Greenland in the past 10 years, so, well, anyway, China is really convenient to use as an example. Whenever something comes up, people just bring up China. Okay, so I just wanted to share that with everyone. Also, the Danish Prime Minister went to Greenland on Friday to start talks, and as for the Greenlandic Prime Minister, he said he agreed to let NATO establish a permanent presence. So you see, you can pretty much get the idea now. In Denmark, the chances of it being exposed are really high. The main question is whether that fig leaf, meaning the part about sovereignty, will be taken away or not. It depends on whether they want to save face for him or not. So let's talk about this part first. We've already started to see some effects, and actually more will gradually emerge. Denmark is, well, a relatively small country on the periphery, that's true. But you have to realize, last week they sold that the pension funds sold off U.S. treasuries, and yes, it was only $100 million, that's true, but the total amount of European capital invested in U.S. stocks and bonds is actually very large. And then in the episode where I was filling in, I mentioned this to everyone. So what's up with Denmark? They're tough and don't say much. Only after they've sold do they tell you, oh, I sold it. That's actually pretty scary. For the US, this is a big concern about their holdings. As soon as there's any change in the stock of assets, they get really worried, wondering if these big European players are up to something. So actually, this is a relatively negative factor for US assets, not in America's favor. But we need to tell everyone this. Adjustments of such large positions aren't impulsive. It's not like you just sell off all your stocks at once. They adjust gradually, bit by bit. Skilled traders will make these adjustments so subtly that you don't even notice it's happening. But after a year or so, when you look back, you'll be surprised. So when its holdings drop by that much, that's usually the situation. Now, as for gold, like the rotation between gold and emerging markets, gold is really strong right now. Let me tell everyone here first, today gold broke through 5,000. It broke above 5,000. And then silver broke through 110. I can only tell everyone, what I just mentioned is the spot price. I can only say that I was optimistic, but I didn't expect it to be this strong. It's honestly a bit scary. And then, on the other hand, there's a report here saying that Europe's largest pension fund has reduced its holdings in US treasuries by 10 billion euros over the past 6 months as of September, down to 19.1 billion euros. Here, I can only say that this has become, they're adjusting the intensity, and you'll gradually see this happening. So many institutional investors from different countries are reducing their exposure to US treasuries. And why is that? Actually, it all comes down to the biggest issue, your trust mechanism. They're affected, so naturally people will take action. And don't underestimate Europe. Those old money Europeans are a very smart group. They're not oblivious to what's going on. So all I can say is that this will have an impact on the US. Maybe they won't sell off US stocks, but it will make it harder for the US stock market to keep rising, because whenever the market goes up a lot, you'll see forces coming in to adjust it. The more it rises, the more you'll see these adjustment forces at play. So that's the situation. It's possible that this year, the US market might only maintain a slow upward trend. All right then. Now, moving on to Iran, actually, the situation in Iran is a bit simpler by comparison. First, the US has started recruiting troops in the Middle East, similar to what Europe is doing. This is because after the previous incident with Iran, the US withdrew its forces, but now they're redeploying them. So that's one aspect. Some European countries, like Germany's Lufthansa and KLM Royal Dutch Airlines, have canceled their weekend flights to the Middle East. Of course, as of Monday, this might not have happened yet, but let me tell you, this is how things go. Before Trump does anything, he always sends in troops first. And deploying troops isn't as quick as we might think. Usually, it's usually warships, and if they're going to arrive, it could take about a week. So right now, he's sending in the troops first. Will there actually be action? I think it's 50-50. As for Iran's response, it's that the supreme leader is the head of the theocratic government, or, well, the leader of the regime. He has gone to hide in an underground bunker. Now, I want to say that the situation in Iran is extremely chaotic, but we won't get into that today. We're just going to talk about one thing here. If some negative news really does come out, I think the main impact would probably be first on oil prices and second on gold prices. The stock market would also be affected, but I think the impact would be relatively limited. So we just want to talk a bit about Iran. I think the situation in Iran is not likely to become extremely difficult or out of control. For it to spiral into an out of control situation, even if there are attacks, I believe Trump is mainly focusing on airstrikes right now. As long as there are no ground operations, the situation probably won't escalate too much. Also, there's Trump's Gaza Peace Committee. Currently, there are about 20 countries that have joined, but they're mostly smaller countries and, small Arab countries in the Middle East, for example. What? Argentina. That's because Malay is a Trump fan, so Malay just followed along and joined. But the issue here is, I think this part is still developing slowly. Maybe not too many people will get involved. For Middle Eastern countries, the main thing is that they're right next door, so if they don't send people in, they might be worried that their own interests could be affected in the future, so they have to work with Trump on this. But the problem is, we see that France doesn't want to get involved, the UK doesn't want to get involved either, and Russia is very laid back, saying, I could get involved, but you want me to pay $1 billion because Trump is asking for $1 billion membership fee? Then they said, well, why don't you just take it from the Russian central bank assets that you Europeans and Americans have frozen? So that's basically some high-level sarcasm, really high-level sarcasm. As for China, up to now, they haven't said anything, so this might just end up being a one-man show starring Trump. If it's a one-man show, then let him perform it by himself. On another note, I think the biggest issue today, let me just say, my conclusion for the weekend is still unease. This is going to be a really big problem. In Minneapolis, on Saturday, there was another incident where an American citizen was shot. He was a 37-year-old white male. He was accompanied by a nurse. Now, the problem is, this is the second similar tragedy in 3 weeks. And what's more, each of these victims fits the so-called perfect victim profile even more than the last. So, before this, that woman, the mom of 3, people said she was in a same-sex relationship, so she wasn't considered a pure victim. But this victim here, well, she's basically a pure white person. So what about this part? This has already made the whole situation really intense over the weekend. The main point is, first, will this spread even wider, like what happened during the Black Lives Matter movement, nationwide and with long-term protests? That's one issue. Second, now, there are already Democratic states saying they want to oppose this because they need to review the budget, and the way ICE, the Immigration and Customs Enforcement Agency, operates is pretty straightforward. If you don't compromise with me, if you don't adjust things according to the Democrats' ideas, then I won't approve the budget. Right now, Trump doesn't have enough votes to pass this budget. So what happens if the budget doesn't pass? The government will have to shut down again. Yep, you heard that right. The government's about to shut down again. I just checked using AI to look up a market prediction. After last Friday, the probability of a US government shutdown jumped to around 80%. With just a few days left, I think, well, it looks like we might be heading for another shutdown. This is really something. Last time, the shutdown lasted over 40 days, and the stock market kept going up. But I think you need to be mentally prepared, because if there's a shutdown this time, the stock market might not necessarily go up. Why? Because repeatedly, what's really being eroded here is Trump's support and credibility. This was actually a pretty big issue, you know, a real game changer. So now with his legal troubles in some states, even some establishment Republican lawmakers are starting to speak out. The opposition is only going to get louder, so we need to keep an eye on this. I think this is something we need to keep watching this week. This is actually the biggest factor among all the so-called non-economic issues. Now, in addition, I want to talk about Trump's poll numbers. Let me just say, and this is just my personal opinion, they're honestly not looking too good. So, let's start with the red one here, and we'll go from the left side. Looking at the chart here, the minus 14.6 refers to the economy. His economic policy is at minus 14.6. Basically, it's dropped below minus 14, and it's just kind of stuck there, not moving. People are really dissatisfied with the economy, but it hasn't gotten significantly worse. And then, for foreign policy, you can see here, the blue line, after the Greenland incident, the negative dissatisfaction level increased again. Then, with the Russia-Ukraine situation, it jumped up here. Looking at this, people seem to think that the Russia-Ukraine issue is probably nearing its end. Now, as for Israel and Palestine, this used to be positive, but now it has also dropped below zero. As for immigration, it was originally a policy that was closer to neutral or even somewhat positively supported under Trump, but now you can see. Last week it was -6, so this -6.2, the level of disapproval is also showing signs of increasing. The better news is about inflation. Previously, it ranged from about -25 to -30. Now it's back to -23, which is an improvement. As for crime, it's at a positive 1.3, so that's still relatively positive, which is good news. But let's take a closer look. If we look at it this way, you see? The negative proportion, but only this. Aside from the crime issue being relatively better, the other 6 items are all negative. Only inflation has improved, meaning the gap has narrowed, and then, foreign policy is also narrowed. The improvement in economic policy isn't very obvious, but the bigger problem is still with immigration policy, which has dropped again. So let me tell you, Trump's current issue is that, from the polls, we can see that his approval rating isn't very good. Now, you could say that his MAGA supporters might not necessarily be the ones being surveyed in these polls, but the problem is, if the inflation issue doesn't see significant improvement, these MAGA supporters, while they may indeed be dissatisfied, and while it's true they won't vote for the Democrats, they might just not express their stance or simply not show up to vote. That's still a problem. For Trump, as long as they don't come out to vote, it's an issue. That would be a problem for him. He could end up losing the midterm elections because of this, and that's a pretty big issue. So, to sum up, let's take a look. The situation with Giuliani isn't over yet, but it should gradually fade away. My assessment here is that Trump will probably get his way. The situation is still rather tense and uncertain, though. If a real conflict does break out and escalates, it will mainly affect oil prices and precious metals prices. IC is a big issue, the budget is another issue, and social unrest is also a problem. However, the impact of social unrest on the financial markets tends to be delayed and lags behind a bit. The bigger issue is the budget, because the government just barely reopened in November, and now, not even 2 months later, it might shut down again. This is actually quite damaging for the US, so we need to be careful. I think this could lead to some situations that are unfavorable for Trump. Moving on, let's take a look at the second topic, which is the divergence between the Federal Reserve and corporate earnings reports and performance. Let's start with the Federal Reserve. This week, there's an FOMC meeting, and Bloomberg has a new monthly survey. From a forecasting perspective, that is, from the viewpoint of economists analyzing the situation, they think rate cuts won't happen until June, but in a moment, we'll see what the trading side is showing. This is even more conservative. Last month's survey predicted that rate cuts would happen in March, but the thing is, after all the chaos caused by Trump this past month, well, not just Trump, but also the economic data, the timing has now been pushed back to June. Although it hasn't gone up, the CPI is still hovering around 2.8. So, in this situation, there's not much momentum for an immediate rate cut, and, more importantly, there's not much room to cut rates. If you cut rates too early and inflation heats up again later, then that would be a huge negative shock. So I think, in this case, the expectation for a rate cut here is actually not very high. It's been reduced a lot. Also, last week there was some news about Trump, specifically about the selection of the chairperson for the seminar. Once again, the industry experts are optimistic about BlackRock's fixed income head, Zurich Ryder, but we need to clarify something for everyone. Is that okay? The green one below, the one that jumps to fluorescent green, jumps to 52, this is what we're talking about. This was the probability that appeared for the recruiter at the time. The original orange one was Kevin Wash, who suddenly dropped down, and there was an even bigger drop for someone named Seth. This is Trump directly saying that he should remain as the White House economic advisor. Now, here we want to talk to everyone about a question. Just how big is the difference between Ryder and Hashtag? Basically, first of all, neither of them has any experience with the Federal Reserve. Another thing is that one of them is closer to Trump, Hashtag, while Ryder doesn't seem to be as close. As for the power struggle with the Federal Reserve, the president does have the right to nominate, but the question is whether this candidate will be approved. The Fed itself has its own influence. In the US, it's basically an environment where all kinds of powers compromise and negotiate with each other. Whether it's Congress or the FMC, you'll see that a lot of things work this way. You have to compromise with others. But the problem is that neither Ryder nor Hazard has this. They don't have experience with these two types of situations. Actually, to me, I'd say there's not much difference between the two, just that one is a bit closer to Trump, while Ryder isn't quite as close. Then we also see a few other people being mentioned. The first is Kevin Wash. All right, and then there's Christopher Waller. He's still just lying in wait there. Waller, I think, will only be brought up if, in the end, there really isn't anyone else to choose from. But Waller and Wash share a common trait. One is Waller, and he's currently a board member. And Wash is a former board member. So why did Trump previously say that both Kevins were great, meaning Kevin Wash and Kevin Hassett both are great? But in the end, why didn't he actually say, I'm definitely going to nominate Kevin Wash? It's simple. Kevin Wash probably promised him, I'll help you cut rates, but maybe not to the extent that Trump wanted. So Kevin Hassett would, of course, cut rates a bit more aggressively. Unfortunately, in my opinion, his candidacy was probably blocked by the Fed. Yeah. And why is that? Well, there was some, I forget who exactly, but someone did come out and say directly that the Fed chair has to be able to convince all the committee members before they'll agree to anything. So if you hear them say something like that, it's basically a public signal to you. Don't pick someone who can't persuade the rest of the committee. If this chair comes in, we're not going to go along with it. So this issue actually shows that the power struggle between the Fed board and the FOMC isn't going smoothly. Let's keep watching how this unfolds. I think Trump originally said he'd announce his nominee at the beginning of January, but now it's already almost January 26th. Today is the last week of January, right? This week is the last week of January. So his nomination process isn't going smoothly. We especially want to remind everyone, what if things go so badly that by May there still isn't a good candidate? That's something to watch out for. And after that, the nominee still has to go through Congress, and it's possible that because of the IC issue, the government could shut down again, or we could see another standoff. So that's the situation. Because this is a pretty big variable, we should mention it to everyone. Mentally, you need to be prepared. Now, about the rate cut expectations, let's talk about that specifically. Previously, we thought that by June, there would be more than a 25 basis point chance of a rate cut, and by around September or October, the probability of a 50 basis point cut would be over 50%. But during this period, as you can see, the probability has basically dropped to July possibly having a rate cut of more than 25 basis points, but for the other months, the chances have shrunk back again. So it does look like the overall expectation for rate cuts has indeed been affected. The second thing is, now we're also looking at this time, this week's economic data. There's actually a lot of data. Durable goods orders have been released, and we can take a look at that. At 9:30, when we check the BIMBR, we can also check the numbers at the same time. And then this is for November, which is a bit late. The second one is the Dallas Fed Manufacturing Index. And then the next one is on the 27th, which is tomorrow, there's the FHFA House Price Index, then the Richmond Fed Manufacturing Index, and then consumer confidence. Consumer confidence should be the most important number tomorrow. Today it was durable goods. Then on Wednesday night, or actually early Thursday morning, there's the FOMC meeting. Then on Thursday, there's the initial jobless claims, which is very important now, and then factory orders, wholesale inventories, and the trade balance. On the 5th, it's the PPI. So there were actually quite a lot of numbers coming out. Today, as we'll see in a moment, the more important one is the durable goods orders. Now, why is there an expectation for a significant rebound here? It's because Boeing announced that in July and November, they received a large number of aircraft orders. So this durable goods order number, the orders are expected to see a big turnaround mainly because of transportation equipment. However, even after excluding transportation equipment, this month's figure is still an increase. So this should be a relatively positive piece of news. In addition, this week, only the president of the St. Louis Fed branch spoke on the 31st, which was after the FOMC meeting ended and the FOMC blackout period was over. As for who else will be speaking, let's move on to the second point and take a look at corporate earnings. Right now, we're still in the early stages of earnings season, so let me first tell everyone if there are any surprises so far. Recently, the stock prices of raw material-related companies have been very strong, that's true. But I want to point out that even though only 2 companies in this sector have reported earnings so far, there are still some things to note. Their revenue growth rate is over 25%, and their earnings growth rate is close to 65%. Of course, let me clarify that out of the 27 raw material stocks, only 2 have reported so far, so these numbers will be adjusted as more results come in. The second point is, within the raw material stocks, there are also mining stocks, but, plastics or steel might not necessarily perform well, so we need to point out that there are some special factors at play here. Also, among the communication stocks, only 1 has performed well. I heard that one company reported an EPS of about 10.87 with a revenue growth rate and earnings growth rate of 40.2%. But again, out of 26 companies, only 1 has reported so far, so it'll still be a while before we see more results. So, the big banks have already announced their results, and now the smaller banks will be releasing theirs one after another. But if we look at the overall picture, the financial sector results are basically confirmed. As for the other sectors, well, to be honest, there are fewer companies that have reported so far, so the pace is slower. Everyone will have to wait patiently for more results to come out later. After accumulating for another week or 2, there will be more results coming out. Now, let's take a look at the kernel density plot. The kernel density plot basically shows the statistical distribution of the P/E ratio fluctuations, not expectations, but actual statistics. It's based on historical data. Then the solid part represents the current situation. It's the probability percentage, the variance percentage. I think, if I remember correctly, it's within 75%. The other 2 are the extreme values. In 2022, there was much fluctuation. Why? COVID caused the P/E ratio forecast to swing wildly. It was adjusted down for 2021, then revised upward. 2021's volatility remained high as the pandemic's impact persisted. Why did it drop in 2022? The Fed began raising interest rates then. Post-rate hikes, there was a P/E ratio correction with large fluctuations. Looking at 2023 to 25, things are more stable. The forecasts for the P/E ratio are all trending upward, and the fluctuation range is also relatively returning to normal. Now, looking ahead to 2026, we see a slight change, but as I just mentioned, this is all based on the already released historical data. Looking at it from this perspective, what we want to tell everyone is that the upward trend is definitely there, but it's still not clear at the moment. Also, we want to point out that this is the first financial report for 2026. In the future, we'll need to keep collecting and compiling the data gradually. These numbers will continue to be updated. Also, this is based on the date the report is released, not on the quarter the financial report covers. To explain further, even though right now they're releasing the financial report for the 4th quarter of last year in July, it's still counted as part of 2026. So, this does have some impact up there. Now, what we want to talk to everyone about is, the impact of the P/E ratio tends to fluctuate quite a bit, but what we're seeing now is that this year it's still trending upward. And the second point is, this continuous upward trend, right now the range is between 25 and 30, which is a bit high, but not excessively so. Okay, so what we're saying is that it's somewhat on the high side, but not too high. So at this point, something is still very important, which is corporate earnings need to keep up, and this is extremely important. Now, let's take a look. This week, from the 25th to the 1st, there are 109 companies scheduled to announce their earnings. So, this is what we call a super earnings week. Next week, there are 139 companies, which is also a huge volume. After these 2 weeks of earnings reports, most of the important companies will have pretty much announced their results. It's just that. For the first quarter, because it includes last year's fourth quarter, it's considered the annual report, so it's a bit different from the other quarters. The reporting period is spread out over a longer time. So, we'll keep watching as it unfolds. Also, last Tuesday when I announced it, there were over 270 companies scheduled to release their earnings reports, but by now, it has increased to 490 companies now. This number, well, the criteria I use are for what are considered important US stocks, so it's not limited to just the S&P 500. That means the final number will definitely exceed 500. I just wanted to let everyone know that this number will keep increasing, and over the next 2 weeks, usually the dates for earnings calls are confirmed about 2 weeks in advance, so for those scheduled later, like at the end of February or early March, they'll be added in as well, so everyone, don't worry about it. So why is this week so important for corporate earnings? Well, in this so-called super earnings week, first of all, Facebook, Microsoft, and Tesla are all releasing their earnings reports after the market closes on the 29th. On that same day, there's also the FMC meeting, so it's going to be a really packed morning. Secondly, the day after that, Apple will release its earnings report. So out of the Magnificent Seven, 4 will report this week. Then next week, on the 5th and 6th, Google and Amazon will report, which means by then, 6 out of the 7 will have reported. And the last one to report is always a bit later. That's nothing new. It's always been later. It's on February 26th. Since today is only January 26th, the exact time hasn't been announced yet, but it's usually around 5:30 or 6 o'clock, at the latest 6:30. So I just wanted to add that for everyone. Also, there's a chart here. Next, this is for this week and next week, since this week is basically July earnings week, and next week is also a super earnings week. We have this chart here for everyone to use as a reference. If there's a PDF, you can download it and take a look. With this, you should be able to see things pretty clearly. The red color represents the big 7, the blue color is what I consider the more important tech stocks, and the green color marks the more important traditional stocks. You can take a look at the release status, mainly focusing on the traditional stocks. Also, for next week, I didn't mark the colors anymore since there's still a lot of them, so these 2 pages are just for your reference. So the 2nd, 3rd, and 4th will be more concentrated. Now let's move on to the part about divergent performance. So first, let me show you this. Even though last Monday was a holiday, we're still looking at the past week as the last 5 trading days. We're treating it the same way as usual. If you compare, you'll see the trend is actually quite clear. It's moving from the lower right to the upper right. What stands out is energy, especially when looking at the closing prices over the past 20 days. Isn't it pretty obvious that it's trending upward? The industrial sector is doing well, and so are raw materials. This might be a bit surprising. These sectors have been quite strong recently. On the other hand, if we look at the so-called Magnificent Seven stocks, for example, consumer discretionary is moving sideways, and consumer staples have also gone up, though you could say they're just barely showing an upward trend from the lower left to the upper right. Also, communication services have been pretty volatile, and information technology is trending downward. What I want to point out here is that there's still a divergence in performance. There's a clear difference. Let me highlight something else. In the energy sector, specifically upstream oil field services, earnings reports have been released. After the earnings came out, the stock market, or rather the stocks, performed quite strongly. And tonight, the last one, BKR, Baker Hughes, is going to release its earnings report. So it's still worth keeping an eye on. Also, as for industrial stocks, even though they've dropped a bit in the past few days, let me tell you straight, what's really driving them? It's the defense sector stocks. So why is that? Trump talked about increasing the defense budget by something like $1.5 trillion, or was it $15 trillion? Anyway, he mentioned a really huge number. Even though most people think that's not achievable, the thing is, stock prices have already reacted. Now, another thing is, raw materials are driving up mining stocks. Why is that? Just look at how gold, silver, and copper have all been going crazy lately. So of course their stock prices are following suit. Now, moving on to individual stocks, let's look at the Magnificent Seven. You can see here over the past week, the past month, and since the start of this year, all three time frames are showing positive returns. Only Amazon has maintained positive returns across all three periods, along with Apple. The issue is that the others keep fluctuating back and forth. In fact, among tech stocks this year, the real strong performers are memory chip stocks. That is, companies like Micron, SK Hynix, and SanDisk are all going up. This is pretty important. Let's also quickly take a look at the performance of a few of the Magnificent Seven stocks. On Friday, it went up by 1.04%. This is significant. It finally climbed back above the 50-day moving average, which is a big deal. Because last week, after that big drop, it couldn't climb back up. If it can't get back above in 3 days, or if it can't recover with a strong bullish candlestick, then that's actually a sign of weakness. Okay, so Microsoft led the gains last Friday, but the problem is this hasn't changed its overall trend. Also, Microsoft is set to announce its earnings this week, so that's something to keep an eye on. Hopefully here, at the very least, it can stop falling and really start to form a bottom. The main pressure is that its 200-day moving average is trending upward, so it needs to climb back above that to return to an upward trend. It still needs some more effort. As for Amazon, its overall trend is more of a choppy sideways movement. Even though it had a big single-day gain on Friday, overall it's still consolidating. I think it's probably waiting for its earnings report next week, so the market is just waiting for that. As for Facebook, it went up on Monday, but the bottom around 1.72 is still not clear. There are signs that it might be forming, but it's not definite yet. The main thing is that Facebook is also releasing its earnings report this week. So whether it can return to the 200-day moving average is still key. As for Nvidia, it's still moving sideways. It's at a relatively high level, just consolidating with some volatility. Amazon, on the other hand, is more in the middle range and is still consolidating as well. And then there's Tesla. Tesla is also experiencing high-level volatility. On Friday, the topic was autonomous driving, which still seems quite promising. However, Tesla currently faces a big problem. It's very hard for its electric vehicles to compete with those from China. Why? Because of Canadian Prime Minister Carney. He previously went to China, and last week he gave a very passionate speech at Davos. If you're interested, you can check it out. But the most important thing here is the impact this will have on Tesla. About 49,000 Chinese electric vehicles are expected to be sold in Canada each year. This will have a huge impact on the US car market. Why? Because people living on the US-Canada border go back and forth all the time. Even though Trump is very unfriendly, for those living on the border, it's either you come over or I go over, so everyone knows each other pretty well. If you go over there and see Chinese electric cars, trust me, even though Americans talk about being patriotic, their actions speak louder than words. They'll go buy a cheaper electric car to use. Right now, the average new car in the US costs $50,000. But you know how Chinese people are. They're super competitive. It's very possible that a $30,000 electric car from China could be extremely, extremely comfortable. It's really hard to make up for that price difference. Once that barrier is broken, Americans will just go to Canada and drive the cars back to the US. You can't stop that. Then, little by little, it'll start spreading from the north to the south. Just imagine how that'll play out. So it's really tough for Tesla to compete on the car itself. Really tough. So what are we waiting for next? SpaceX. Oh, sorry, I missed that. Excel is still waiting for the robots. Let's keep watching. Anyway, Musk has his magic, so we'll talk more about it when the time comes. As for Apple, it's still pretty weak. After hitting a high in early December, it's been going down all the way. Here, we still need something to change the trend. I think that's the main point here. It's about Siri is also going to collaborate with Gemini. So what exactly is the content of this partnership? Honestly, it's kind of bittersweet because actually Siri was the earliest AI concept, but it just never really developed further. Yeah. As for Google, last Friday its stock did drop, but it's still the top player among the 7 big tech giants. Everyone has really high expectations for it. So we'll keep watching this space. I think things look pretty positive here, honestly, because to be real, if you bundle it with Google Chrome or on your phone, as soon as it's integrated, it's just so convenient. Also, it won't nag you with messages like you have reached your free limit for today. Using it just feels really familiar. Now, as for the semiconductor sector, last week it actually dropped, which was a bit unexpected, but overall it's still in an upward trend. AMD led the gains, TSMC led the gains, and Nvidia also led the gains. Oh right, last week there was also the news that the H200 can be sold to China. So with AMD, TSMC, Nvidia, and even MediaTek going up, it's not that surprising anymore. But what about Intel, huh? It dropped sharply, right? We'll talk more about that in a bit. Also, Brembo and GlobalFoundries went down as well. As for Intel, it's like a gold medal beggar, basically begging with official approval. You know, the US government gave them this qualification, so they rushed to get the gold medal, but then turned right around and started begging again. So, in the end, fundamentals are still the key to the future. Why did their earnings report turn out the way it did? It's because their outlook for this year's recovery is just... The outlook they gave is really conservative, so people were pretty disappointed, and the stock corrected downward. We'll keep watching it. I think it probably still needs some adjustment. But after all, it's still a gold medal beggar, still a beggar wearing a gold medal. The US government, it seems, is ready to back them up, basically to support them. So let me correct myself. I still think we need to watch and see. A technical change needs to happen here. Anyway, since TSMC has poached someone, that should help turn things around. Also, Micron is still going strong, but there was some negative news before the market opened today and its stock dropped. It was reported that Nvidia... I was a bit surprised to hear about Samsung collaborating on HBM, because the strongest player in HBM isn't Micron or Samsung, it's actually SK Hynix. But Nvidia choosing Samsung might be because they have their own foundries. Still, whether this will deliver the best results, we don't know yet. We'll have to wait and see. And then another thing is, besides Nvidia, you can also look at AMD. And another thing is, even if Nvidia officially chooses you, maybe officially they pick Samsung. The problem is, your customers might not necessarily choose Samsung. As long as Micron and SK can deliver, there's still a chance. Okay, so SanDisk, last Friday it went down, but we can all see how much it's gone up overall. Probably the only thing that's risen even more fiercely than gold and silver is memory chips. As for TSMC, it's still pretty weak here. I think we just have to wait for their earnings report, which comes out in March, so maybe we'll have to wait a bit longer. Now, looking at AMD, you can see it's moving up, right? There's some upward momentum, just a little bit, not much. Is there anything else going up? It's kind of like Tesla, right? Let's keep watching. Personally, I've never been bearish on AMD. Well, anyway, it's always been the eternal number 2. It survived under Intel for so long, and even if it stays there, it won't really make much of a difference. I think this company will still find its own space, you know? So Oracle over there is still going down. Honestly, its chart really doesn't look good at all. I want to remind everyone to pay attention to this. By the way, has it been a while since we've seen any news about ApeCai? It's been over a month, right? Has anyone noticed? Oh, that's just how people are. When you're hot, everyone flocks to you. But when things cool off, it's like fireworks fading away. When you're popular, everyone supports you. But that's just how realistic America is. As soon as Gemini came out, OpenAI suddenly became cold and unpopular. Of course, I'm telling you, OpenAI is going to face some serious challenges. They have to make a real substantial change right away, not just keep burning through equity. And if you really want to collaborate with others, then just hand over the shares to them. Don't try to hold on. Basically, Altman needs to humble himself. Otherwise, well, you know. Back in the internet era, we saw a lot of companies like this. They started out with a huge buzz, like Netscape, Ask Jeeves, and others, but in the end, they just disappeared. The ones that survived weren't necessarily the ones that made the biggest splash at the beginning. So, OpenAI, this is just a reminder, you really need to be careful. After the TikTok deal was signed, they still didn't get a piece of the pie. That's also a big warning sign. As for Oracle, I think the short-term pressure is still ongoing, so that's something to watch out for. I haven't seen their earnings release date yet. If I get a chance, I'll update you on that. Also, the rotation stocks are still going strong. Last Friday, lithium mining stock Albemarle kept going up, and Newmont also continued to rise. Let me add a note here. Industrial metals are still strong. Just like Freeport, they're doing temporary pricing sales. That means after setting the price with the customer, they'll deliver the spot barrels to you in about 1 to 4 months. And there's also spot and short-term contract sales. It's usually around 60 to 70. Let me tell you, for industrial metals, there's generally always some kind of contract sales arrangement. The only difference is whether the contract is for a quarter or for a year. For example, when mainland China negotiates with Australian iron ore suppliers, the contract used to be annual, 1 contract per year. But now, sometimes it's changed to 1 contract per quarter. When it was an annual contract, there was a chance to lock in high prices. Mainland China had to accept the high prices in order to secure the supply. Now that it's changed to quarterly contracts, things might be a bit better, but I want to point out that this situation does exist. So when prices rise, the impact on the profits and revenues of companies in the same industry or sector comes in stages. It's quarter by quarter. But if we look at gold mining stocks, their sales are all spot sales. Precious metals don't use contract sales like that. Contract sales are mainly for base metals and industrial metals. So just so everyone knows, these are all spot sales. And it's a fixed amount. Whatever I dig up, that's what I sell. Do you get what I'm saying? Okay, now as for oilfield service providers, they've still been pretty strong lately. Even though there was an upper shadow on the candlestick last week, I think this part is still holding up. Regarding the oilfield service recovery, HAL and SLB reports suggest a 2026 bottom with a 2027 rebound. Let's watch this play out. Looking at the major oil giants, ExxonMobil, Chevron, and then ConocoPhillips, let's see what these big players are saying. Once you've listened to all of this, you'll have a pretty good sense of things. Is this year really the time when oil prices might bottom out? But stock prices usually react ahead of oil prices. And then, in addition to that, here's another oil and gas index. Okay, and then let's talk about the airline and defense stocks. There are 12 stocks in this category. All right, so as I mentioned earlier, the sectors that have remained strong so far this year are basically these groups. LMT is Lockheed Martin, then Northrop Grumman, General Dynamics, RTX Raytheon, Boeing, HII, L3 Harris, GE Aerospace, and then the last few on the list are relatively smaller, more like service providers or subcontractors, so they have that flavor. These are still quite strong. Then there are 2 other stocks that have been performing, Johnson & Johnson, which has done very well and is expected to recover after the earnings report. I think there's still a chance for it to go up, as its fundamentals are still solid. Also, Gilead Sciences has made progress with new drugs. One of them is, you won't see a combination of a drug starting with Q and a drug starting with K that together reduce breast cancer mortality risk by nearly 35%. That's 35%, which is pretty significant. Why is that? Well, it's not just about women, but in terms of gender, if it's not men, then it's women. Physiologically, that's just how it is. Breast cancer drugs are considered major drugs in the US. There are a few categories of big drugs, like diabetes medications. For example, diabetes drugs have led to the development of weight loss drugs. Then there are cancer-related drugs, which are also among the major ones. All right, so this area is something the market is really looking forward to. In addition, their hepatitis drugs have also made new progress, so you can see that after a breakout jump, the performance has been very strong. So that's a brief introduction for everyone. Now, to talk a bit more specifically, the S&P was up slightly by 0.03 last Friday, but its equal weight index actually went down. So overall, last week's market was somewhat under pressure. And the Dow also went down, so last Friday, actually, there was a bit of a pattern. Monday and Tuesday were pretty tense. Then on Wednesday, Trump withdrew, so the market rebounded for 2 days. But by Friday, things had calmed down again. So, next let's take a look at the pre-market performance. I think this will be pretty. Let's check out the pre-market situation. As for the futures, they're still fluctuating slightly up and down. Today, it's basically been like this the whole time, bouncing back and forth between about minus 0.2 and 0.0 something. NASDAQ is down 0.1 to 0.2%. That's normal. the futures market shows no strong direction, so we must wait for the opening. So let's take a look at individual stocks here. Judging from the stock performances on the screen, the gains seem to be leaning more toward optimism. The first one is FCX, copper prices. This one? This is about capital expenditure. Well, it says it's going down, but last week they released their earnings report, and here we can see that the stock actually went up. So I think even though the report itself was somewhat negative, the market seems to have already digested it. And then, as I just mentioned to everyone, NEM is continuing to rise in pre-market trading today, up more than 3.5%. So Cisco is up, and BKR, its adjusted EPS was better than expected, so it's also up. As for Apple, this should be a rebound. Now, Texas Pacific Land. Actually, Texas isn't near the Pacific, but this is basically a shale oil company, and it's performed pretty well. Also, you can see that. How's earnings report from last week is still driving its stock up. Valero, which is also a refinery, is rising as well. Expander Energy. This is also energy related, and it's going up too. So you can see that energy stocks are still very active. And then OXY is Buffett's favorite. Occidental Petroleum is also going up. Today, what we're seeing perform well are mainly raw materials, petrochemicals, and these more traditional industrial stocks. And as for the ones going down, Intel is still dropping, I think we might need to wait a bit longer on that one. Then there's Humana. Health insurance stocks are falling. Other than that, there aren't that many stocks declining. As for Micron, which I just mentioned, Samsung won a partnership with NVIDIA, so that's a bit negative for Micron. Also, Steel Dynamics is down, and AMD is dropping too. Oh, but that's a drop in after-hours trading. And I think AMD is announcing their earnings next week, right? Yeah, it seems like their earnings report is coming out next week. And Tesla is also down. Let's take a quick look. So that's probably why the futures are showing slight ups and downs before the market opens, which isn't surprising, because if you look at individual stocks, there really hasn't been any strong movement among the popular stocks. The ups and downs are pretty close together. The US dollar index is still dropping, which I don't think is a good sign. As for US Treasury bonds, they haven't continued to rise. The 10-year yield quickly fell below the 200-day moving average. Now, let's take a look at the economic data. Durable goods orders have come in stronger than expected. This situation is actually pretty good. Excluding transportation, it's still at 0.5, which is better than the expected 0.3. And regarding the capital goods shipments related to investment in GDP, it's at 0.4, which is also better than expected. So these numbers are pretty good. But here's the issue. Looking at these numbers, the expectations for a rate cut will be squeezed. So let's briefly explain this to everyone. All right, next, let's take a look at everyone's questions. Will the US stock market take off? I don't really think so. Be patient. I think at most it's more likely it will be a slow upward trend. Anna, you made a good point. It's important to keep some cash on hand. I agree with that, because if you have, that's pretty much right. Yeah, no mistake there. Because if you have some stocks that have already gone up a lot, it's a good idea to cash out a bit. I definitely agree with that. So unless you've already gotten in on the strong stocks right now, if you had strong stocks that have started to weaken, you might want to adjust a bit and wait for another opportunity to buy back in later. That might be a more reasonable approach. That's a more suitable approach. Also, some people have given their suggestions, so let's take a look at them. We'll slowly take in the feedback and make improvements, okay? All right? All right. As for international politics, let me talk about it a bit. Honestly, I don't really want to add much because if it weren't for Trump or Biden, back then, I remember when I was still trading futures, there was a period when I could sleep really well. Anyway, it's just, when you looked at the announcements the night before, there wouldn't be any surprises by the time the market opened and closed the next day. But the problem is, things got more complicated with Trump. There was just so much news, and he pulled a lot of moves. Don't underestimate him. Some of the things he did actually had long-term effects. All right, we're just saying that right now. What we're concerned about is the financial side, and that's true. But it's also about the political side and some other things. At certain times in the future, these things will end up reflecting back on the financial markets, so you really have to pay attention to that. All right. I think CNA media is actually pretty interesting. All right, so they all buy gold medal. I know Taiwan has gold medal beer, right? Anyway, let me just tell you, after the US government gave them that investment, they just couldn't die off. Oh, Netscape browser, such nostalgia. Yeah, because the others were pretty good too, but the problem was their products just couldn't compete with Microsoft. All right, let's not talk about that anymore. Okay, someone is asking about that. That Dino 886 boy, let me just tell you, last time we got a warning about this, that's all I can say. I think gold stocks and the currency market will outperform gold itself. Spot trading is actually more interesting. Why? Because, as we just mentioned, it's spot sales, right? It's not tied to the futures contract price. So if the spot price is rising, then, because of the stocks, sometimes there's leverage involved, so the profits that come out aren't just a straight line of growth. You could say there's an accelerating effect. So if you ask me, I can tell you that you should consider gold stocks. They're better than spot ETFs. But when it comes to silver, you might want to think about this. Why are there fewer silver stocks? It's because the market is smaller. If you want to trade silver quickly and efficiently with higher liquidity, you should consider silver ETFs. The reason I bring this up is that things with poor liquidity, when the market reverses, the loss you take on price can be much bigger. So this is really just a matter of understanding the concept. Whether it's small cap stocks, futures, or anything else, the same principle applies across the board. So we might talk a bit more about this here. Everyone should really go and develop some basic skills in making these kinds of judgments. So here, we're just sharing this with everyone. By the way, Caesar 911, I can't answer your question, okay? All right? So someone mentioned construction, heavy electricity, banks, nuclear energy, aircraft carriers, right? Let me tell you, it's not me, but let me come back and share something with everyone. Recently, this year, have you noticed why people keep talking about sector rotation and divergent performance? It's because this year, it's been harder to see a clear upward trend. If you go back to our sector overview, and if you click into it, think about what's happening with the stocks in those sectors. What the index of the Magnificent Seven tells you is that the situation we saw last year, where everything rose and fell together, is much less likely to happen now. This year, you'll see more upward trends happening within smaller groups or sectors. That is to say, there will be growth within these smaller groups. You might be able to draw some parallels from this. We can provide you with some information, and you don't necessarily have to only trade US stocks. It's also possible that after looking at the US market, you come back and consider how to adjust your strategy for the Taiwan stock market. All right, so I just want to let you know that we try our best to share our perspectives with everyone. Of course, we are also subject to certain regulatory restrictions. As for any feedback regarding our speaking style or trading operations, we'll take it in, digest it, and look for opportunities to improve in the future. Okay, if there are no further questions, that's all for today's program. We'll see you again tomorrow. All right then, that's it for now. Bye-bye.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.